The wealthiest aren't always the happiest, but they're the freest. They have the ability to move wherever they need to go or do whatever they need to do. They have the ability to quit a job if they don't like their boss. They can go on vacation here versus there. And so it's not the quest for more money that should drive you, it's that quest for freedom that I always say should drive. If you have a mindset that you're trapped and your family, for whatever reason or because of who you are or where you're born, that you're always going to be poor, yes, you are always going to be poor. But you always see people that break out of that. They read books, they set their goals, they are determined to make money, and they find a way to do it.
Most people, when they aim to be wealthy, they decide, I want this kind of net worth. I want to be worth X millions of dollars. But what they don't realize is that if you have a certain amount of cash flow to pay for the lifestyle that you want, then you can be what most people call financially independent.
Right.
And I found that hack through short-term rentals through Airbnb. So by the time I got 4 properties, I was able to replace the income from my full-time job, and I was working 50 hours a week doing that, down to 3 or 4 hours per week managing my properties, which weren't even mine. They were just managing my Airbnbs. My dollars per hour went stratospheric. So for somebody that's starting now with nothing and wants to get out of the rat race, I don't know of any faster way to do it.
Hello, welcome back for episode 10 of Wealth Breakthroughs. I'm Patrick Gentempo. Today, we're going to start with Andy Snyder from Madward Press, who's going to say what so many others are afraid to say. Andy's going to show you what Warren Buffett gets wrong about today's markets. Obviously, Buffett's an inspiration to anyone seeking new wealth, but Andy says he's fallen behind for a shocking reason. Here's Andy with more. Andy, I've really been looking forward to this conversation, so thanks for taking the time to sit with us.
Absolutely, thank you.
Well, you have a very interesting story, so why don't you tell us about your background and what got you into doing what you're doing?
Sure. So my background, I think it's pretty unique and varied. My high school career was not much of a career. I think if my high school guidance counselor is watching this, I win the bet. She loses. But I never thought I'd be in the wealth world, right? So I had a pretty lousy high school career. Took some time off, spent 2 years building houses. I think it was the best education I ever got was getting out there, skipping college, taking that break, and going out and just seeing the real world. Building houses, learning how the business world works. If something breaks in my house now, I can fix it. I had to know how to do that, and that's really important. So did that for 2 years, decided I wanted to be an engineer, follow my dad's footsteps, go into the engineering world. Did a semester in college, very quickly realized math probably wasn't my favorite thing. I did really well in it, just wasn't my favorite thing to do. I had an English class. The English professor said, you need to do this, you need to be a writer. So I actually changed schools, decided to go for English, did 4 years of that. Then graduated college, realized there's nothing for a English major to do. So I went into the financial world. I was always really intrigued by that. Had a good friend that was always picking stocks. I was picking stocks of my own, became a financial advisor. Realized quickly that nobody wants financial advice from a 22-year-old. So I put my skills together, was use an English degree to write about finance, and that's how I got into this career.
How long have you been doing that now?
15 years or so. Yeah.
So basically, interesting, you didn't listen to your high school guidance counselor, but you did listen to your college English teacher.
That's right, yeah. I learned my lesson. You got to pick and choose who you listen to.
Well, and as much as that's an entertaining statement, it's true, right? Picking and choosing who you listen to because you're in the business of getting people to listen to you through your communications. So did you think that you could really make a go at just writing about financial information, or did you think it had a low probability of succeeding?
I think it all depends on what you put into it. Writing in general is really tough. So going through college, journalism, making money in the newspaper world is really hard. Everybody says you can't do that.
Right.
And I'm not in this to make money. I think that's why I did make money.
Expand on that. Why do you think that's why you did make money? Because you're unattached, or you're just doing it for the passion of the work?
I think the passion of the work shows through. And so when you have a good product, people come for it. When you're trying to force a product onto the market, then you're going to have bigger issues.
Yeah, that makes sense. So with the writing that you do, how much of the success of what you're doing, because I could speak especially for my partner, Jeff Hayes, he is a huge fan of Manward Digest, and he's always forwarding things to me that I'm reading and saying, wow, this is so well written, very compelling. And the actual subject matter content's important. So when you look at this, how much is style of writing, as far as saying, hey, the end product and its value to the reader, how much of that is the quality of the writing, if you will, and how much of that is the actual subject content in and of itself?
Sure. I'd say it's 80% style, because you can have the best ideas, the best research, but if nobody reads it, nobody's going to read it.
Right.
If they don't care, they're not going to read it. So, I always joke that I write on a third grade level. I take that really seriously, make it so everybody can understand it and wants to read it. And to me, that's really important. If they don't enjoy reading it, they're not going to read it.
How do you decide what to write about?
I read a lot. I try to read a new book, try to dig into a new book every week. So most of the time, it's just whatever's on my mind. And that's the key to, just always have a curious mind. I've always said that I'm dangerously curious. My wife would certainly say I'm dangerously curious. And that curiosity propels me into new subjects, all the time.
Where's that curiosity led you? Any wild destinations or interesting places?
Sure. Probably the most dangerous place it's ever led me was the wilds of Alaska.
How long ago was that?
That was about 14 years ago, 14 years ago.
Uh-huh.
So I was doing this job. I was working from home one day, so you should never work from home. And I got a little bored. And so I have my captain's license. Big passion of mine is fishing. So I went online and decided, wonder what happens if I applied a couple lodges. I think I applied at 3 or 4. By the end of the day, I had 2 job offers. And I said, this one has good internet. I can still do what I'm doing here, up there.
Right.
So I went for it. Day 1 or day 2, I met my wife. Ended up spending 2 years there and met some of the greatest people I've ever met, some of the richest, wealthiest people, and a lot of my thought process now in wealth evolved up there. So going into that, it was very conventional, fundamental analysis. What I was taught in college and then through grad school. The traditional fundamental analysis that everybody talks about. Then I get up there, I'm fishing with hedge fund managers, John Malone, the richest or the largest landowner in the country, movie producers. My claim to fame, I was on the producer of The Aviator, his Christmas card holding a big old fish, and got to know these guys really well and learned how they make money and what they think about money. And how for many of them, money made them miserable. They were coming up, getting away from California, getting away from the lower 48, coming up to the middle of nowhere, had all the money in the world, but it didn't matter up there. They just wanted to get away from it all and get into nature. And so that's when my thoughts on wealth really started to evolve.
Can you maybe drill down a little and tell us some of the lessons you learned specifically, maybe from certain people that stand out in your mind?
Sure. Talking with... I forget his name right now, but he's a huge, he's a billionaire. Walmart heir, at the time owned the Denver Nuggets. And so we flew him up, or he flew up to be a part of this entertainment investing group, right? And so he just flew his private plane into Ketchikan, flew a float plane out there, and he lands at the dock, shakes all of our hands, says, I hope this is worth it. So I look around, and we're in one of the most beautiful places in the country with great people. Couldn't ask for a better thing, and all he really cared about was making more money, and he just looked miserable. And you could just see how that permeated a lot of people. But I got to see the transformation of folks. So the way it worked up there is folks would fly in. You could only get there by boat or float plane. So once you were there, on the rock we called it, you were there. And they'd get off the plane. They'd introduce themselves. They'd say, "Hey, I'm John. I'm an architect," or "I'm John, Fred. I'm a lawyer." They kind of identified by who they were, how much money they made. You didn't see the real person. Then we'd spend 3 days, 5 days up there fishing, exploring the wilderness, really getting to understand how the world works around us. And they'd change, and we'd see their happiness go up, and they started thinking less about their bank account and how they had to make more money and how they could enjoy what they had and why they had it.
Does that lead you to certain conclusions about how you might define success or how you might define wealth?
Sure. Wealth, I'll never deny that wealth is important. I just got back from Nicaragua, one of the second poorest country only to Haiti in the Western Hemisphere. Yeah. Very poor, but very happy. But those folks aren't free. They're stuck, in their little postage stamp plot of land. They can't get out if they wanted to. There's a lot of political tension, a lot of turmoil there. So they don't have the money to get something better, but they're still happy. And I think that's key. Where I see wealth really being important, what we write about a lot in Manward, is that liberty side. You look back through history, the wealthiest aren't always the happiest, but they're the freest. When political tension rises, when whatever happens, family issues, they have the ability to move wherever they need to go or do whatever they need to do. They have the ability to quit a job if they don't like their boss. They can go on vacation here versus there. And that wealth really pays off there. So it's not the quest for more money that should drive you. It's that quest for freedom that I always say should drive your idea.
Well, circling back to the billionaire you're talking about, saying, "I hope this is worth it," meaning, is he going to somehow make bigger deals or acquire more wealth when he can't possibly spend the money he has in multiple lifetimes? Did he have a breakthrough? Did he have an epiphany? What happened for him?
Not while he was there. I certainly haven't seen that, but other people did based on that. So, that comment that, he said, "I hope this is worth it." Everybody heard it. We went for a hike later that day. I was with some younger guys. They heard it. And these were guys that were kind of following in his heels, and they absolutely had an epiphany. They were up there to discuss making money, do business deals in the entertainment world. And they went away knowing that those deals are important, but there's a whole lot more to it. They didn't want to end up like that billionaire that's kind of miserable. They want to be the billionaire that doesn't have to go to work every day.
So he became their cautionary tale almost.
Exactly. Right? Yeah. Don't be this grumpy guy that married into one of the wealthiest families, built his own wealth, and still isn't happy. That's not what any of us are looking to do.
Yeah, it's interesting too, because when you're talking about Nicaragua or when people are impoverished in such a way, when you're in survival mode, it's a really tough circumstance to break out of and create some level of freedom. Do you find, just in your writings and kind of your experience, that some people are actually in that situation, like in a third world country such as that, but some people are here, but they're like that in their mind, and they're kind of stuck in that in their mind, and they can't break free?
For sure. You asked, did I expect to make money writing? There's a conventional logic that nobody gets successful writing books or novels. I wrote my first book when I was still in college or grad school. Didn't make much money on it. That was the mindset. But so many people, especially in America, one of the strongest countries in the world, have this mindset that they can't do better on their own. They depend on the government. With the elections, so many people are depending on their party to pick them up. I tell people it doesn't matter. It's what's in here that's going to set you free or make you wealthy. And if you have a mindset that you're trapped and your family, for whatever reason or because of who you are, or where you're born, that you're always going to be poor. Yes, you are always going to be poor. But you always see people that break out of that. They read books. They set their goals. They are determined to make money, and they find a way to do it. And I think that's the absolute key. It's not the people in Nicaragua that were born. There's people there that are absolutely getting rich and are taking advantage of their entrepreneurial opportunities and doing well. And that can be anywhere, the streets of Baltimore, New York City, wherever.
What are you writing about most now? Like, what's got your attention?
What's got my attention right now is a lot of that, taking that conventional logic. I look at investing today as a great evolution. So, I ended up going to grad school, very conventional background there, but everybody talks about modern portfolio theory. And I think it's a joke. Modern portfolio theory was invented in 1952. It's anything but modern these days, but yet it's the investing canon. It's what everybody talks about. When modern portfolio theory came out, the internet wasn't around. News still traveled really slow. We didn't have 24/7 news cycles. So many folks are still looking at like a guy like Warren Buffett, who's got billions of dollars that he doesn't know what to do with right now because he's stuck in that old mentality. Meanwhile, the stock market was up 20% last year, and people are just eclipsing his rate of growth because he's kind of that old school investing. And now it's less fundamental. This is what I write about probably the most is getting away from fundamental analysis and looking at technical analysis and what's really driving the market these days. I look at a lot at volume. You look at the algorithms that are driving the market, digging into what really moves the market and investing in those ideas.
Back to some of your math skills, I guess.
I guess so. It all comes back to it. Yeah.
Interesting. So in looking at that, and this is interesting, so as far as your philosophy here, fundamental analysis, looking at companies, which is kind of a Warren Buffett approach, right? I mean, really study the company, understand the company, know its culture, so getting into all the fundamentals. But now basically, do you see the market as this sort of, it's got its own identity, its own sense of life, if you will, and that's why you can do more technical analysis to figure out what the market is, how the market's running or what it might do?
For sure. You can look at the market as one big ball or many different segments. Fundamental analysis, somebody's always doing it, but to think that I can do it any better than the guys on Wall Street at Goldman Sachs that are pros, have all the tools in there in this efficient market where information travels at the speed of light. We can't do that. But there are certain patterns that are really obvious. Like right now we're in a strong momentum pattern. And so when I look for stocks, and we're killing it just following momentum. You don't look for the stocks that are doing something different. The stock market was up 20% in 2019. So find the stocks that did better than that, figure out their patterns, and don't try to reinvent it. Don't try to catch the falling knife. It was a strong momentum market, so buy momentum stocks. Until that doesn't work, then figure out that pattern and within that overall orb of the stock market, figure out what works and keep doing it.
So let's say that I am viewing this right now, and I've got I want to have my own wealth breakthrough, and I'm a little confused, or have been a little confused about what to do. I figure out that maybe a lot of these wealth management people or advisors are commissioned insurance salespeople in a sense, and they're trying to put me into certain things. And I'm looking at the market, I'm seeing people are making a bunch of money in the market, and some people are trying to tell me about real estate. And I see all these paths in front of me. So now if I'd say, I relate to this Andy guy, I kind of like what he's saying resonates with me. How would you start me on the path and walk me down it?
Sure. The first thing I tell you is to look at all that investment literature. What are the brokers telling you? What's the traditional financial advisor telling you? What is it that 90% of people are doing? Identify that. Put it over here and don't do that. If you do what everybody else is doing, that's the definition of mediocrity. Right. If you're fine with mediocrity, absolutely. Go invest in those ETFs that everybody's touting. But if you want something better, you have to, by definition, do something different. So start looking at and identify those patterns that nobody's doing. If you Google something and portfolio diversification, you're going to get 9 out of 10 results will be the exact same thing. Follow that one thing that's different. Figure out why it's different. It may not work for you. It may not be right, but figure out why it's different and follow that path.
How much do I rely on my own judgment versus trusting the judgment of experts?
90% rely on your own, okay. But you have to create a good baseline judgment to start from. You can't go into it ignorantly or blindly. So read books, read as much as you can. Read a diverse array of books. Don't just figure out what you like and read more of that. Read the stuff that negates the stuff that you like and start building on that. And then you'll train your gut. There's all sorts of research that shows why your gut instinct is so smart. Your brain can take old patterns and reconfigure them into new information. And when your gut is telling you something, 90% of the time it's right.
At the time of this recording, the stock market's at all-time highs. And do you feel like it has room to keep going? Do you feel like maybe we're getting ready for a correction? Do you have a sense about this?
Sure. What I'm on record saying is we're going to keep getting these all-time highs until we get close to the election. Then a politician's going to screw it up. Right now, the markets are very politically driven, and until we have all sorts of debt issues, starting to see some currency issues, that sort of thing. None of these problems are new, but they're going to start to snowball. Interest rates are the thing. I always get picked on for my love of interest rates. I have a book at home that's 2-3 inches thick on the history of interest rates. I think it's the greatest financial tome ever written, because it explains the evolution of how money has evolved and what governments have done to really screw it up. And once you understand that, going back to that baseline knowledge, you can make some good decisions. So watch interest rates. Right now they're falling. I'm on record saying they're going to go negative in the United States. We're one recession, one big problem away from them going negative. That's when things are really going to turn. I think the elections, the variability, the volatility with the elections are going to, if anything is going to take us away from those record highs, that's it.
So interesting as you talk about the government screwing up currency, which I am in complete alignment with that. Do you have any sort of perspective on crypto and what that might mean to the world in these markets?
Sure. It doesn't mean, in my world, it doesn't mean a whole lot right now. I love the idea. I love the background behind it. I just think the government is going to be too heavy-handed and regulating it, keeping it out as the mainstream. Once we see some sort of collapse or we get some sort of political enemy really pushing for it, then we could see it evolve. But I think the central banks are going to go in there. The Fed's already talking about creating its own form of crypto. So the idea behind it is fantastic. The freedom, the liberty behind it, I'll stand behind all day. Whether it turns into something fruitful within our lifetimes, I don't know. Someday, absolutely, but the dollar's going to have to collapse. America's debt problem is going to have to implode.
Yeah.
Then we could see that.
Well, it's interesting. The Fed creating crypto. It's kind of a contradiction. The whole idea is to get it out of the hands of the government and regulation and make it a free currency.
Yeah.
So it's like they maybe are using the technology, but it defeats, I think, what the intention of the whole thing is.
Yeah.
Really, really interesting. Do you give perspectives for investment outside of the market, or do you basically stay in the market?
Most of what I write about and talk about is related to the market. That's my bread and butter. I've done some real estate investing. I'm a big believer in farmland. One of my passion projects, we live on a farm now. I love anything related to community-based farming. I think it's a great way of looking at just the economy itself. So many of the things that are wrong with our culture and our political sphere, I think a lot of that really comes out of having homegrown food, understanding that. We published something recently about how when folks are disconnected from where their food comes from, what that does to their psyche. And I think that comes to, we write so much about know-how in Manward. If you don't understand what's going on in the world around you, you can't make good decisions. And our culture has really pushed people, this is getting kind of to the base, the foundation of Manward. Our culture has pushed folks into kind of identifying themselves with one thing. Like I said, in Alaska, folks would get off that plane and say, hey, I'm a lawyer. That's the only thing they know. I think that's dangerous. The more we understand everything that's around us, the smarter we'll be, the better decisions we'll make, and ultimately the wealthier we get. So to answer your question, I stick mainly on the financial or the stock side of things, option side of things, but there's no reason that people can't get involved in other investments.
Now you're hitting a couple of positive buttons for me, because the whole idea of growing your own food, living that lifestyle. What's fascinating, and I'd love to see your philosophy on this, because you're kind of portraying a philosophical view of, hey, there's some relationship between how you live, how you're being maybe even self-sufficient, and what kind of habitat or environment you create around you, and that does relate to your investing and how you deal with money and wealth accumulation, where most people would say, okay, I need to read maybe one newsletter on this subject, another newsletter on this subject. Somehow you're weaving these things together. Can you speak that out a little bit?
Sure. So at Manward, we focus on three things. We call them our triad: liberty, know-how, and connections. And so that question is kind of tapping into all of those. The liberty side, of course, is the wealth side. The know-how side is, understanding so much of what goes on around us. Understanding what it takes to be a strong real estate investor. That ties directly over to, equity, buying shares of Procter & Gamble, something like that. Then we talk about connections, and that's really where we get back to that Alaska story and taking advantage of the folks that know more than you do. I just wrote today about the idea of nobody has ever built an empire entirely on their own. Barack Obama got in trouble for saying, you didn't build that. Won't get into politics of that.
Right.
But there's a very strong sense that, you can't. It's kind of the American psyche right now that you have to do it entirely on your own. Like nobody, someday the cure for cancer is going to be really, really obvious. But right now it's far from obvious. We have to build our knowledge, block upon block to get to that point. And so when it comes to investing, that's a really important thing, is to read as much as you can, take those nuggets and build on it, and then understand, there's the old adage of invest in what you know. It's really important. Really, there's thousands of investments out there. Focus on what you truly know and build on that.
So in that respect, the grass isn't greener in the places that you don't know.
No,
Yeah,
absolutely
just
not.
go deep on what you do know.
Yeah, stick in your own pasture. There's plenty of grass there.
It's interesting because the idea of American success, I think for a long time, has been about rugged individualism, right? And that's what the country had to be built on. Declaring an independence, et cetera. You had the rugged individuals that had to make that stuff happen, had that grit, and then rise. But I know, even for our company, one of the themes we chose for this year is collaboration. So are you seeing, it's probably a leading question based on what you said, but are you seeing that collaboration is really the path forward as compared to doing it on your own?
I do. There needs to be that sense of independence that you really, if you think of collaboration, that the government's going to do it for you, that's bad. That's where that rugged individualism, as an individual, it's on you to figure out your own path to success and how to get there. And how to get there usually involves teamwork, collaboration, building on other people's ideas, coming up with better ideas. You put two people together, they're each going to come with their own ideas, but put them together and start brainstorming, you're going to get a much better idea. So you have to have that individual determination to go and do it. America wasn't built by one person. It was boat after boat coming from different parts of the country, building on that idea, going in that hall in Philadelphia, really brainstorming those ideas and say, well, this would work, this won't work. I think that's what's really important. And I think we're getting away from that. So many folks just, think the election is going to change their life, and if so-and-so gets in the White House, we're all going to be rich. It's not true at all. Our wealth rarely hinges on what happens in Washington. So much of course of politics is local. That's where that collaboration comes in, and where an individual voice can really have some power.
It's interesting how I guess I'll call it seductive. The 24-hour news cycle is for get you in it, get you riled up, get you. And would you advise people to maybe tune that stuff out and just get to work on, like you talk about, Washington's not going to make you rich, and maybe even having to tune that out and tune out, the drama, and get focused on maybe your life, your identity, and what you're trying to do in this world.
Absolutely. We don't have a TV in our house. Like, we don't watch CNN, Fox News. I kind of enjoy traveling because then I can admittedly binge on some crappy TV. But, this is what I learned in Alaska. We didn't you turn the radio dial, you could spin it from one end to the other, nothing. I was up there during the 2008 election. Didn't miss a thing. Left under one regime, came back with another, nothing changed. I didn't miss, having Fox News telling me what to think or CNN telling me the other side of things. It's dangerous. You don't want somebody telling you what to think, especially if all they're trying to do is sell radio spots and commercial spots. You need to get out there, read some books, figure out what you believe in. And I'm not saying don't get involved in politics, just the opposite. You have to know what's going on, but you have to know what's going on from basically the side of the truth.
Right.
Understanding firsthand what happened. I went to the FDA last year and spoke about CBD and some of the issues there. Get involved. I took a team there, and we came back. We were just shaking our heads at there's thousands, millions of folks relying on them to make a decision, and some of the questions they asked us were just, they needed to know those answers ahead of time. So I think if people really saw what was going on, they'd tune out the election, they'd tune out of the news and go about their own thing.
What caused you to go down there? What was it you needed to do?
Sure, I wanted to go down there and represent Manward readers. So I polled the readership, asked them what they thought about CBD, some of their confusion, and how they thought we need to come out of this prohibition of a plant that was legal and a big part of our industry, for hundreds of years. And so I took a bunch of comments down there and basically just read off what readers were thinking, added my own thoughts to it, and kind of spun it all together into almost finger pointed at the FDA for not making better decisions and not being more informed when so many folks are depending on them to make smart decisions. That was really the grasp of the whole thing, was that this body was making very important decisions that affect the lives of folks, and here's this board that's really ignorant on the decisions they're making. They're relying on information coming to them from the scientific community, but for 80 years they cut off that information. The prohibition of cannabis, marijuana. There's virtually no studies. China, Israel, those countries are doing the studies and putting us to shame when it comes to potential cures. And here we have this kind of arbitrary prohibition that didn't work out so well. And so we went down there and kind of poked holes at a hearing and got some good attention. We got some nationwide or global press out of it. And I think we helped move the needle. So that's something I'm really proud of.
You should be, and I guess the good news is, the bad news is they were woefully inadequate in their understanding. The good news is, though, that they received you,
Exactly.
and that maybe you moved the needle a little bit, and that at least that process still is available to us.
Yeah, and I think that's something we really have to protect. And 100% you're right that the government still is by design, by that 250-year-old design, has to listen to us. And we really, as Americans, as voters, we have to keep pushing to make sure that those ideas stay there and that we can continue to get our voices heard. We don't just have, a news outlet telling us what to think and the decisions being made behind closed doors. Very important.
Yeah, and very admirable that you took the time to go do that and to represent the community that you built. And so let's talk about that for a moment. You said there's kind of like three guiding areas or principles that you use. It sounds like, and tell me if I'm wrong, it seems like it's about community building in Manward Digest. It's about saying, hey, we're going to have a conversation and we're going to build the community. And it doesn't sound like you're trying to appeal to as wide an audience as possible, but literally you just have a vision and a direction, and the people that want to come on that journey can.
For sure. Our audience is folks that want to be better, want to do better, and want to learn more. If you're closed-minded, you're not going to enjoy what I write, because I write things that push the boundaries, that tell the truth. And if you're stuck in that conventional mindset and this is it, this is what the TV told me to believe, this is what I believe, you're not going to enjoy it. But if you truly want to get better, if your goal for 2020 is to make more money, be healthier, and get more done, we write a lot about productivity, then you're absolutely going to enjoy it. And to do that, you have to have that open mind. We have core principles, to be sure. We have I think our political views are pretty obvious to anybody that reads more than 2 or 3 essays. So we have those core principles, but you have to be open to other ideas and let them inform your own ideas.
So it seems like you still have a lot of passion around this. You've been doing it for 15 years, you said. So what keeps you excited, and where do you think this is going to go?
Sure. I'll answer the second question first. I don't know. I want it to go as big and far as it will naturally go. I'm not going to push it. I'm not going to do anything that doesn't make sense for our readers, for our overall, our core beliefs. But what pushes me, I got a note the other day. We had a trade in 48 hours. An options trade went up 150%. It happened just like the technical charts would tell us. And I got just a bevy of notes. And one of those notes was a guy that just bought 2 options contracts couple $100. It was his first trade. He absolutely nailed it. And so many folks are afraid to make that first trade. They think they're lose their money. They think, they've been trained that options are bad or that trading's bad. They just need to buy an ETF and hold it. And so much of that's wrong. That's that knowledge that 90% of people are going with. But seeing notes from folks that say, you really changed my life, or you turned my 401k around, that's really what drives me. That financial side of things is definitely the underlying theme in everything I do.
Your enthusiasm for what you do is contagious, and I am really heartened to see kind of the purpose that's driving all this and the experience that drives it all and how it's serving people out there in the world. So it's a different view, I think, of wealth and wealth development and how it might happen and how your personal story kind of ties into it. So I very much appreciate you taking the time to sit and share it all.
Well, thank you. It's fun to share it.
We are over the moon excited about the feedback we're getting from the Wealth Breakthrough series. And I want to give a very sincere and special thank you for those who bought the series. It supports us, supports our work, allows us to get this out to the world for free so people everywhere can have their wealth breakthrough. But for those who bought the series, it's especially heartening to us to be able to know that you're supporting this work so we can do what we do every single day. Welcome back. Next, we have Brian Page, founder of B&B Formula, here to show you how you can tap into the billions per year travelers spend on Airbnb to stay in homes. It's an incredible wealth hack. Brian can even show you how to find homes for rent them out, then list them on Airbnb to make up to thousands per month. It's simple. It puts automatic cash in your pocket. Here's Brian with the full story.
Brian, thanks so much for taking the time to talk to us.
Glad to be here.
So let's talk about what got you doing what you're doing today, like what led up to this.
I started as a real estate investor right out of college. I didn't really want to have a traditional job. I wasn't very good at holding a job down. I got fired from basically every employment situation that I had, so I was looking to be an entrepreneur, and I got into real estate. That's how I started as a real estate investor.
What got you into real estate?
I was just researching how people become wealthy. I spent a summer after college doing an internship, and I had a lot of free time after work. I was an intern at Hilton Resorts at Hilton Head Island in South Carolina. And so I started reading all these books on making money in the stock market, making money investing, and in real estate. And I learned that most people either hold their wealth or become wealthy through real estate. And I thought that might be what I wanted to do.
It's interesting because, with the concept of wealth breakthroughs, I see people approach this from different ways. Some are, they've got a passion and that drives them into a particular business and industry. And others like yourself saying, I want to have financial independence, be wealthy. Yeah. So let me go and study, the highest probability ways I can get there. So it sounds like that's kind of the path you took.
Yeah. I really wanted to just find something that was kind of tried and true and something that wasn't too difficult to follow in someone else's path. And I also wanted to create cash flow because I really wanted financial independence, which is totally different than wealth building, and I think that's what everybody should aim for.
Can you make the distinction? So how are they different?
Most people, when they aim to be wealthy, they decide, I want this kind of net worth. I want to be worth X millions of dollars or have a certain amount of money. But what they don't realize is that if you have a certain amount of cash flow to pay for the lifestyle that you want, then you can be what most people call financially independent.
Right.
And that number might be a lot lower than what most people think of, like when I get $5 million, then I'll be where I want to be financially. So I think cash flow is something that is different for each person, but if you can create that cash flow in your life, you can have financial freedom.
So with real estate, how do you create cash flow out of real estate? Or how did you when you started out?
Well, I did it the traditional way. So most people would buy property and then rent it out and make cash flow that way. I was also flipping properties, which wasn't really cash flow, but I was making pretty good money doing that. I was doing all the traditional real estate models, but it was after the real estate crash around 2007, 2008 that I had to start over. And so coming out of that was very painful.
I was going to say, was it a really tough time for you?
It was very tough.
Like, were you caught off guard and, were you holding a lot of stuff?
I mean, everybody was making money on the way up, everybody. And when it crashed, it took me off guard. I was into speculative real estate pretty heavily. And I was caught Warren Buffett says, when the tide goes out, you see who's naked, right? So the tide went out at the real estate market, and a lot of people lost everything, and I lost everything. And so my whole portfolio and of course my credit was decimated, and I had no money, and so I had to start over. And so for several years, I was trying to figure out what that thing would be. And I didn't really want to go back into debt again. I didn't want to go back in and do traditional real estate. And so I was just looking for, I guess, a hack. And I found that hack through short-term rentals, through Airbnb. And that's kind of where I started down that road.
How psychologically do you get past that? So here you are, you get out of college, you say, I want to generate wealth, I want to be financially independent.
Yeah.
And you're successful, you got momentum.
Yeah.
It seems like you figured it out, right? Like, okay, I did it.
Yeah.
And then you lose everything, including your credit, which is very important if you're going to try to get started again. So how did you psychologically find a path forward to be able to even start exploring new ideas?
Well, it was very painful because I thought I was a big shot. I became a millionaire in my 20s doing real estate. And when that all got taken away from me, I was in the hole. It wasn't just that I was back to zero. I was severely in a bad spot financially and in debt and all that kind of thing. So I had to find a way to start over. And for me, it was realizing that with this new sharing economy, with the new gig economy, whatever you want to call it, that you don't need any of the traditional things that you need with most investing. In fact, you can leverage other people's assets to create money in your life. And that's what I found right away, is that I could approach people that had homes, that had properties, and leverage those to create cash flow in my life. And that was how I was able to become financially independent the second time.
So what was that like? So you're showing up saying, here I am with no money, no credit, but I've got an idea.
Yeah. Oh, it was not easy.
Yeah, so I can imagine what that might have been like. But so what was the idea exactly? You said, I think I can probably piggyback on this thing. So walk me through the thinking process.
Okay, so it's essentially what it is this rental arbitrage. So just like you take something wholesale and sell it for retail, well, the same thing here. I'm taking a property that's for rent for, say, $1,000 a month. I turn around, put it on a home sharing site like Airbnb, and I make $3,000 a month. I pay the owner what they're asking, $1,000, and the difference I get to keep playing that arbitrage. And the reason that you make more on a site like Airbnb is you're selling that property by the night, and you're paying for it by the month. So there's a tremendous spread there that you can make money. And the amount of cash flow that you can make on one property is significantly more than if you're just a traditional real estate investor. So I was being able to do that by approaching owners and saying, hey, I have this crazy idea, but if you'll work with me, I know it'll work. And I could speak their language because I was a landlord myself in the past.
And so you actually say that you generate more revenue doing this than when you're having to take the risk, go into debt, if you're flipping a house, putting in all the money, the time, the rehab it, et cetera. You're basically just you're taking existing assets other people put their money into.
Yeah.
And then you're just you're figuring out, at least you said, it's like an arbitrage. You're just saying I'm going to buy it kind of wholesale, and I'm going to sell it piecemeal at a retail price.
Yeah, not just a little bit more, but an order of magnitude more. So 10 times more. For an example, if I were to take a studio apartment or a one-bedroom apartment when I owned it and I rented it out long-term, I'd make $200, $250 a month.
Right.
Whereas now I can make $2,000 net on a one-bedroom place. Wow. So it's just, there's no comparison between the old way and the new way. And also with the traditional model, you have to come up with a down payment. So if you're going to buy, you put down 20%, you buy the property, you got to have credit, all these different things. And there's nothing wrong with that. It's a great way to build wealth, is to own property, and I do, once again, own property. But this allows anybody to go turn someone else's asset into their cash flow. And I don't know of any way to do that except through this new sharing economy.
And the homeowners, the people who are actually renting to you, are they okay with you going? Because if they're renting monthly, do they also rent nightly? They just they have two prices quoted, or they just want to do the monthly rental?
No, I'm just looking for a traditional landlord that's looking for a one-year lease, and I sign a one-year lease with them, but I get written permission to do home sharing. So they know up front exactly what I'm doing. And then there are owners that I'll partner with. So if an owner has a place for rent and they're not really sure if they want to do this with me because it's too out there, then I can partner with them. And I can say, let me put your property, turn it into a short-term rental, and then we'll split the revenue 50-50. So they make more than they would normally, and I make money with no money out of pocket, no deposit, no long-term commitment, no lease. So there's several ways to do this.
Was Airbnb kind of an inspiration to kind of look at that and say, God, look at what these guys are doing. I could probably do that, in the way that you're doing it.
Yeah. Well, I use Airbnb as the platform. There are other sites. There's VRBO. There's a bunch of sites like this. And the really interesting thing is it's expanded way beyond property. So now there's ways to do this with cars. You can use sites like Turo. There are sites where you can make money with your backyard or with your raw land. You can turn yachts or RVs into income. You name it. I mean, just about anything now can be shared and turned into cash flow.
Yeah, and you keep referring to the sharing economy. In a prior project, we interviewed Paul Zane Pilzer, the economist, about the whole sharing economy theme. So on the macro level, it's a fascinating thing to see how it's emerged.
Yeah.
The demand, though, is the demand really constantly there? Do you find yourself sometimes saying, well, I rent this place for a month or for a year, and it's not meeting the demand's not meeting our needs, or is it still robust?
That's a good question. Well, the number of users is growing as fast or faster than the number of providers, the number of people that are providing the homes, providing the underlying thing that you're going to pay for or rent. So we're not yet, I don't believe we've entered the maturity yet for the market. There's still tremendous opportunity. And if you look at all these sharing economy companies that have come online, most of them have only been around about 5 to 10 years. So not very long. So we haven't entered that maturity yet, and they're expanding very aggressively. So there's plenty of opportunity.
Are there certain profiles you look for as far as regions, or do you do cities only, or immediate suburbs, or how do you figure out where to go with this?
Well, I started locally, and I recommend most people start locally wherever you live. But I now have taught thousands of people all over the world how to do this, and I've seen that there's really no correlation between how well somebody does and the size town they live in. So I have people that are in rural areas, small towns that are doing well, large metropolises, large cities, different countries, not just in the U.S. So and the other thing that's really interesting is it's not just tourist destinations. I live in a touristy area. We're here in New York. This is definitely a big destination.
Yeah.
But it works in places that you would not think it would work. And the simple answer for that, how is that possible? Well, it's because you are serving essentially the same purpose hotels serve. And if you look at where hotels are located, they're located basically everywhere. They're on the side of the highway. They're in small towns. They're in big towns. Those are people that are looking to travel short term. And guess what? People are also looking to travel short term on Airbnb and VRBO for various reasons way beyond just tourism.
Well, let's use me as a use case. So I'm gonna get some free advice here.
Sure.
So,
of course.
through whatever circumstances, I'm holding 2 homes in New Jersey, in the suburbs of Manhattan, but it's still a little bit of a trip. And as you're saying, I'm like, oh yeah, there's this hotel over here, this motel, and they seem to be actually pretty full and pretty busy. But I'm looking at suburban town. I wouldn't think there'd be much demand, and I'm running rents right now that have me at a negative cash flow. Just that are long term.
Yeah.
So should I start to be thinking about when my lease comes up, on these rents, I maybe should go into short-term rentals and see if we can actually turn this into a positive cash flow situation.
You certainly should. In fact, your cash flow, I would say conservatively, could be 200 to 300% more. So if you're doing $2,000 a month, you could look at $4,000 to $6,000 as a short-term rental. That's pretty typical. So it's tremendously more money. Now, would you have to furnish it? Yes, you would have to furnish it if it's an unfurnished place.
Right.
But the net cash flow is considerably more. So it's definitely something that some owners are doing now, and I would suggest that people take advantage of it.
Does it work on different size scales? Because one of the houses, which investment property from long ago, but it's a smaller 2-bedroom place that maybe lends itself to a little bit more. The other one's 5-bedroom, 5.5 bath, a bigger place. Do people rent those types of places?
Yeah, I found that I've done everything from very low income areas, very inexpensive places. For example, I have a 3-bedroom house that goes for $99 a night, which doesn't sound like much, but you do that times 25 days a month, maybe a couple $100s on the weekend, it turns into some serious money. So that's a lower income area, and I also have luxury properties. So I have a multi-million-dollar home that I don't own that's in Scottsdale, Arizona, and we do very well with that, over $100,000 a year on that one property.
Wow.
And now we're looking at a bunch of properties in Florida that are also luxury properties. And then, of course, I have some in the middle as well. So anything from low income all the way up to luxury can be put on these sites and turned into essentially an income stream.
And you said you use mostly Airbnb as the platform.
I do, yeah.
So this is fascinating because I know so many people, entrepreneurs that want to, same kind of a disposition saying, I really want to work for myself. I'd like to generate cash flow. I don't really have a great idea, and I don't have any capital resources to go invest in something. So this is like, it sounds like the investment is little to nothing to get in.
And you can create cash flow in the next 30 days. So I'm a big fan of Robert Kiyosaki, who I think you had on the show as well, or one of your other shows.
We interviewed for one of our other series.
Yeah, and Robert Kiyosaki talks about you're out of the rat race when your passive income exceeds your monthly expenses. Well, I don't know of any other vehicle where you can do that with one or two moves. So within just a couple properties, you can get 2 or 3 of these properties on Airbnb and be generating more than the typical American makes in a year full time. So I was able to do it in 4 properties. So by the time I got 4 properties, I was able to replace the income from my full-time job, and I was working 50 hours a week doing that, down to 3 or 4 hours per week managing my properties, which weren't even mine. They were just managing my Airbnbs. So the time savings, first of all, to be that wealthy with time was tremendous for me, because my dollars per hour went stratospheric. But then to also be essentially out of the rat race within just a few months. And not only have I done this, I've had many, many students that have done exactly that. So for somebody that's starting now with nothing and wants to get out of the rat race, I don't know of any faster way to do it.
It's one of those almost sounds too good to be true kind of
Yeah,
propositions, because as you describe it. But let's do a walkthrough. So okay, now I'm watching this.
Yeah.
I'm hearing what you're saying. I'm like, oh my God, I would love to do that.
Yeah.
But now so now my first step is to identify some properties.
Sure.
I guess, right? So where do I go to identify properties? I look, for rental pools online, Realtor.com, or where would I go?
There's 2 main sources. There's online and offline. So online could be any number of sites for your local area. It could be anything from Zillow to Craigslist to your local paper that's online, any kind of online source. If you just Google your city and rentals, you're going to find all kinds of long-term rentals. So that's where you start online. Endless sources there, and depending on what country you're in, you might be looking at other sites. In Australia, for example, than you would here in the U.S. And then there's offline leads, and that would be driving neighborhoods, looking for rental signs, looking for anything that's out and about. So you go to a real estate investors meeting, for example, and find a real estate investor. That's a great source, because usually a real estate investor is going to have many properties. So if they have 40 properties and they're like, hey, I got a couple of vacancies coming up next month, you want both of those. And so you get multiple properties from one owner. So there's online, there's offline sources. Really anywhere you would look for a rental to live in, that's where you're going to look for rentals to do this with.
Do I need to have some amount of credit worthiness? If they're going to rent me a property, I guess. You because you understood it, probably were able to talk.
The answer would be normally yes. But if you
yeah.
do what I teach, you don't have to even have that.
Really?
I was able to do it with my credit being essentially decimated.
That's what I was wondering. Saying why somebody had to take a chance on you, saying I'm gonna you're not showing the wherewithal to be able to honor the terms of the lease, but nonetheless I'm going to bank on you.
Well, there is no lease, because there's 2 ways to do it. Okay. So the way I do it is I approach it as a service. So if I'm approaching you as an owner and I say, you're asking $1,000 a month for your property, what if I get you $1,500 a month with no extra work on your part, no extra liability, no extra risk? I'll do all the work, and we'll do month to month. So at any point, if you don't like the way this works, I'll just walk and we'll part ways.
Wow.
Who would say no to that? So now you're not going to check my credit. I'm just going to say, okay, I'll be here tomorrow and I'll take photos and we'll get this thing listed. Let's say it's a furnished property.
Right.
So we sign a deal, you sign a piece of paper, and we're off to the races. So I'm offering you a service.
Right.
So there's no lease, there's no deposit, there's no first month's rent, there's none of that. And you'd be surprised how many owners will take that deal. So in that case, you don't need any credit. I was actually able to get owners on board with doing leases with me, even with my credit being bad, and that's a whole other discussion, how to do that. But it is possible to do it even when you don't have any credit.
Is your preference the joint venture with the owner, as you just described, or to say you're just going to walk in, take the lease, and take over? But in the lease, you have to have permission to sublet, I guess.
Well, I prefer leases, because a lease gives me full control over the property for a year and all the profits, 100% of the profits, because I'm not giving them anything beyond what they're asking for. They're just getting a great tenant. They're getting me as a tenant. Right. When I go with a partnership, then I've got to give them some of the profit. The advantage, of course, is there's no commitment on my part, and there's a lot less money involved. So it just depends on what model you want. I like to do leases because I know for sure I'm going to make money with it, and I don't mind signing a lease. But if people are risk averse, they might want to try the partnership model.
Yeah. Do you ever run into difficulty with people saying, I don't want nightly renters in here? So you have to find the person that's got a disposition and say, I'm okay with letting you sublet.
Yeah. Don't misunderstand me. There will be people that say, no, I'm not in any way interested in this. But there are people that say yes, and you don't really need a whole lot of yeses to start adding up to some serious income. So I just approach people and I play it as a numbers game. And some people are going to say no, and some will say, hey, that sounds interesting. Let me consider that. And I've gotten good at explaining to them why they'd want to go with me over any other tenant.
What is the bandwidth on this? Like, how many properties can the average person kind of manage, in this scenario?
That's a good question. So I started getting, when I first started out, I got about 3 or 4 properties, and it started to get a little bit unmanageable because at that point, let's say you have 4 properties, so every night or every other night you have 4 sets of guests checking in, 4 sets of guests checking out. That happens every day or two. So essentially what you're doing is you're running a hotel, except your rooms are distributed. So we're here in a hotel right now. All the rooms are in one location. They have a front desk that manages everything. You don't have a front desk. You are the front desk. So what I had to learn early on was how to outsource all that because I didn't want a job. So I found a way to create what I call a virtual front desk. And the virtual front desk is just what it sounds like. It's a front desk that manages all the guest communication, the cleaning company that has to come and go, any kind of things that might break on the property, handyman services, all that kind of thing. But you can do it all virtually nowadays.
Right.
For a few pennies on the dollar, you can outsource all of that work, all the day-to-day tasks. And so my job simply becomes looking for more properties. So you're able to leverage your time that way and essentially take a step back. So now you can start acquiring more properties. And it's really just a matter of how many you want to get. I mean, you could get dozens. You could. There's quite a few people that are doing over $1 million a year on Airbnb now with 40, 50, 60 properties. But I would say the average person, if their goal is to, for example, do $100,000 a year, they're looking at about 4 to 6 properties
That they can manage.
in order to make $100,000 a year. And that's kind of where I started. That was my goal, was to do a 6-figure income. And I did that actually within 6 months, my first 6 months on Airbnb.
So now, if I'm a student, like I show up and say, this sounds great.
Yeah.
I got to do this. What's the timeline in training? Like, how long does it take me to learn to really do this properly before I'm actually starting my first house?
That's a loaded question. If you're going to do it without me,
No,
it could
with
take
you.
a while.
I'm saying
Oh,
with me, yeah.
No, that's fast. I actually take people through an entire training where I teach them how to do this. So usually I'd say it's about 60 days, 30 to 60 days. Most of my students get their first listing in the first 30 days, and then they're working on their second listing by the end of 60 days. So I would say it takes 2 months to really understand the process and how it works and how do you communicate with these guests and how do you fill your calendar and kind of working out all the kinks. And a lot of people are doing that while they're working a full-time job. So they're doing it on the weekends. They're doing it in their spare time.
Yeah, so I'm guessing, or now I was guessing, but now I know there's nuance here. It's not like
There is nuance.
it doesn't take a week. I could train you. If it's 30 to 60 days, there's a lot of little nuance that matter to make this work right. Otherwise, it could not work out so well.
Yeah, it's not difficult to do, but it is complex because you have a lot of moving parts. Now, it's not complex when you have 1 or 2 listings, which is probably 95% of people on Airbnb only have 1 or 2 listings.
Right.
Once you go beyond that and start scaling, that's where you need systems because it's all about scaling is where you make money in any business, and that's the key here is understanding that.
Now, I have to imagine Airbnb likes this, right? I mean, it gives more properties on their platform, more offerings for the people who are showing up. So do you find that that's true? I'm assuming it, but I don't know it.
I would say they're mixed on that. And the reason is because Airbnb essentially presents itself as a company that helps people make money with their own house or with their spare room, or it's kind of a side gig, a side hustle.
Right.
Not so much geared towards big operators or people that are going to build a big business on the site, although that's where a tremendous amount of the bookings and revenue comes in on Airbnb is from large operators. So really, it can be both. It can be a side gig or it can be a big business.
I've noticed, and you brought up Robert Kiyosaki earlier. So we went down to Arizona, to Phoenix area, Scottsdale, to
where he's
interview
from.
him.
Yeah.
And what we did is we rented a house on Airbnb, brought the
go.
crew in, the full film crew. So we had enough bedrooms for the film crew, a place to film him, et cetera, et cetera. And I noticed that this particular Airbnb, this house, that it was it was branded because they had multiple homes. So do you think they're doing what you do, or do you think they own the homes? Because I'm sitting there saying, wow, they just built a business inside of Airbnb where they've got homes, probably 5 or 6 of them around Scottsdale. And it made me think, when I go back, I'm going to look for one of those places because it was set up right, it was nicely done, it was clean, all the things that you'd care about. And I was like, I can't believe somebody's building a brand within the brand. So is that sort of what you do? I mean, would people know your brand on Airbnb, or would it just be kind of invisible?
You are probably staying in one of my business partners' properties.
No
So I
kidding.
have partnered, yes. Now, I don't brand my own Airbnbs, but I have a business partner, and we've now, it was a former student of mine who started doing properties in Scottsdale. And so we have 18 properties in Scottsdale, in the greater Scottsdale and Phoenix market. So you may have stayed in one of ours. And
Now, is that house owned by your partner?
no,
or-
none of them are owned.
Wow.
They're all leases.
Wow.
So, $5,000 to $10,000 a month leases and up. And it's a very hot market. Scottsdale's one of the best luxury markets in the country.
Yeah.
And you may have stayed in one of our properties, yeah.
Wow. So so there's a few ways to skin this cat, I guess.
There are. Yeah, that's the great thing. It's open to really anybody. Somebody that has more money, that has the ability to invest a large chunk of cash, they could do that in a luxury property without the risk of having to go buy that property and not understanding and sure of the market. And it's also open to anybody on the lower end as well. And it's really all just completely relative to whatever the market rent is. So you can make $1,000 a month, or you can make $8,000 a month on a property, depending on what the market value of that property is.
So now somebody's watching this again. I'm trying to think like them, and they're saying, "So I didn't miss it, right? There's still going to be demand, and there's still an upside with this. It's not saturated at this point for entrepreneurs coming in and saying, I'm going to do this model."
No, not at all.
Yeah.
No, there's definitely the recent stat that I read is that there's 1 million new users per week signing up to use Airbnb for the very first time.
1 million a
1
week?
million per week.
Wow.
Yes, that's what the current stats are, and that's worldwide. But the thing about Airbnb is the awareness now is very high. So if you were to ask 10 people, have you heard of Airbnb? Most of them would say they've heard of Airbnb. When you ask 10 people, have you stayed in an Airbnb? It's very, very low.
Yeah.
So awareness is high, adoption is low, and that basically shows us that we're not anywhere near a maturity level yet.
And I have to imagine this is where if I were an Airbnb shareholder, or if I were somebody that was invested there, I'd say I'd be encouraging this kind of behavior, because I think it's creating demand, right? The fact that more properties are coming on and that they're in all these varying regions, and that's creating more demand on my site, and I'm getting a piece of all that.
Yeah, well, Airbnb is getting a piece of all that, and we're not taking advantage of anybody. We're letting the owners know right up front what we're doing. Everything's in the open. Everything's in writing. We make sure that we protect the owners. So I go so far as to insure the property. So I insure it for any damages. If they were to burn to the ground, the owner gets paid off. If somebody were to sue, I get liability coverage. We make sure every I is dotted, every T is crossed, so that there's not going to be any issue for the owners. And so, this is something that there's a demand, and we're fulfilling a demand that's out there and providing a service, and so we make money and the owner's happy, and Airbnb is, I'm sure, very happy.
And do you find the owners are like, I would never want to mess with that, so I'm happy you're doing it, as compared to them saying, oh, that's a good idea, I think I'll do it?
I've been asked that before. Of all the people I've met with, and I've met with hundreds of owners face to face now, I've never had somebody say, that's a great idea. I'm going to go do that right now.
Right.
Because if they were going to do that, they probably already would be doing it. And most owners, they just want one thing. They want to have no vacancy, and they want to have a tenant that's going to take care of the property and pay the rent on time. That's what they're looking for. And they really just want to avoid one thing, and that's vacancies. And they may have multiple properties, so they're just trying to keep those things full. And the last thing they want to do is start a new venture, a new side business, and they might not even have a system to manage them, so they're not really interested in that.
How much longer do you think this is going to run before we get kind of like where the supply and demand sort of start to equal out?
You got me. It's hard to even say. I wouldn't know how to answer that question.
You think it's years at least?
Oh yeah, definitely years. Yeah. I mean, I remember when Airbnb was very new on the scene. People were like, this isn't going to last. It's not going to work. There are some challenges we should talk about with regulation. There's a lot of regulations, just like there is with Uber and all these sharing apps and those kind of things. But the interesting thing is that about 90% of towns and cities in the U.S. that we researched, we hired a research firm, allow home sharing. So we're sitting here in New York, for example. New York is not a very good city to do short-term rentals in. It's very, very restrictive. But there's very little, if any, restrictions in other areas that are within a short drive of the city.
Right.
So I have students here in New York, and they simply go across the river to New Jersey, and they get listings in other locations. So the key is to knowing where you can do it.
Yeah, I have to imagine homeowner association rules.
Yes.
Where I live in Park City, Utah, I know some areas
Yeah.
You got to have
HOAs.
month or more. Yeah, the HOAs demand that some areas they can do nightly and some are weekly. So it's just what part of the town are you in? It's a resort town.
Yeah, it's just like any real estate. You know, you can't do commercial real estate operations in a residential area. You can't live in a commercial district. There's limitations, and same thing here. There's limitations, but that's no reason that anybody should not look at this as an opportunity. There's massive opportunity here.
So I'm somebody out there searching again. What's the most important question I should ask you?
I would say, how can I learn what you're doing? How can I jump in on this?
Yeah, and so you started out doing this yourself. You now are teaching it. How many students have you taught?
We're approaching 8,000 people around the world.
Wow. So there's a big appetite for it.
Oh, definitely. Yeah, people are hungry for this, and a lot of people have been successful. That's the thing that really excites me is I've had teenagers that have been killing it on Airbnb, and I have people in their 70s that have never done anything with real estate, never done anything with, didn't even know what Airbnb was, and they've got properties that are doing well.
I was just about to say, my next question is like, who's your typical student? Like, who's showing up for this?
You know, there isn't really anybody typical. Every kind of socioeconomic background, 31 countries around the world. Airbnb is in every country but North Korea right now, so it's really anywhere there's English-speaking people have probably heard about me and tried this. And quite frankly, it's open to just about anybody. I had a couple of people that didn't know how they were going to retire, the people that were in their 70s, and they literally had no plan for retirement, were planning to live. This one gentleman I'm thinking of was going to live with his kids, and he was in a small town in Georgia, and he took my training, finally went through it, applied it. Now he's got 3 listings, makes about $3,000 to $4,000 a month net, and he said, "You saved my retirement." So I believe it's a retirement solution for people, and it's also just great for millennials and young people who are the main users on Airbnb, and they want to create income with the gig economy, and they're doing it.
And that anticipated my question, because I'm thinking like the avatar in my mind for this is
Young.
A millennial,
Yeah.
right? But I also, in the conversations we've had during Wealth Breakthroughs with so many people, there's a real challenge, especially here in the United States, with people not being ready for retirement. They're at retirement age, not even close to ready. They don't really have the resources to go.
It's a crisis.
and
It's a
invest.
retirement crisis right now. Most
Yeah.
people are not prepared. And just like I mentioned at the beginning of the interview, most people say, well, once I have $1 million and I can live off that interest, then I'll be able to retire. But I think that's a very backwards way of looking at it. It's a very old model. What you want is not the $1 million. What you want is the cash flow and the interest that $1 million generates, which really is not much when you think about how much that actually
Interest rates are
creates.
so low.
Very little.
You can't live off
Even if you invest in a hot stock market, which could go down. But when you create cash flow, that's very different. You could create $2,000, $3,000, $6,000 a month cash flow doing this model through real estate, but in a different way through home sharing that could immediately solve that problem. And that's what I'm finding. So what we're finding is that most people that host on Airbnb are generally baby boomer age, and most people that use Airbnb are millennial or younger. So that's starting to shift, but we see, for me, I've seen all different ages that have become hosts through what I teach.
And talking about retirement,
Yeah.
and I think that you said a lot of people have it backwards, right? You need to generate cash flow is a better idea than trying to live off the interest, which is a paltry interest at this point.
Yeah.
On whatever. I mean, the type of cash flow you're talking about, you'd have to have several $1 million in the bank to be able to produce that much interest every single month.
Yeah.
So is there a whole reframe? I mean, the idea here in Wealth Breakthroughs, what are the breakthroughs that we can have? What's a new understanding that we can have that can help create wealth? So when it comes to retirement, do we have it wrong? Do we have it backwards? How should we be looking at it?
Well, I don't know that it's backwards because the old traditional models still work. A financial advisor would tell you, you put your money into these investments and we're going to build a plan for the next 30 to 40 years. And at the end of this plan, if it all works according to historical averages, you'll have this much money coming in and you'll be able to retire. But what's not being taken into account is that we live in this new economy. They're calling this new economy. And the things that are possible now were not even possible 10 years ago. So Airbnb didn't exist 10 years ago. You couldn't have made $1,000 or $2,000 a month forever on a property that you don't even own. That wasn't even possible before. You can make money now with a car. You can put a car on Turo and turn your car into cash flow. There are all kinds of ways now to start creating money and income in your life that didn't exist before, and they're possible because of technology and because of the new economy and what I call the gig economy, or most people call the gig economy. So to me, it's the idea that retirement doesn't have to be something that's out there in the future. If I wanted to stop working today and just live off the money that comes in from this new economy and what I've created, I could do that today. And I've seen people do it very, very young.
Is that the idea of financial freedom, like having cash flow that supports you without you having to do much of anything?
Well, I think wealth, I want to redefine wealth, at least the way I define it, is not just income or money or net worth, it's money plus time. So if you're here in New York working as a stockbroker on Wall Street and you make $400,000 a year, but you work 80 hours a week and your health suffers and you do that for 30 years, I don't think that's wealthy. Versus you could be making $10,000 a month, working a few hours a week, traveling the world, which I know many young people that do exactly that. I know many Airbnbers that do really well doing that kind of thing. And they have time freedom and they have financial freedom. So it's being able to enjoy your life, do things you want to do without spending all your time working.
So it's more of what you do as compared to what you have.
Yeah, it's what you do. It's the idea of work less, have more. It's the idea that most millennials, if you ask them today to identify who they are, to tell you, if you said to somebody, who are you? And you ask a baby boomer, they'd say, I'm an accountant, I'm a teacher, I do this. But if you ask a millennial, they don't identify with what they do for a living. They identify with what they're passionate about. They identify with experiences. They identify with lifestyle and these kind of things. They don't so much identify with, I do this thing, because it's no longer you pick a career and you do that for 30 years. That paradigm is over. And so I think that whole shift is happening, that people are realizing, wow, there's more to it than just, yes, we want to have income. Yes, we want to build wealth and do all those things, but we also want to have the time to enjoy it, because time is a finite resource, unlike wealth.
Are you looking at innovating any additional things that maybe build on this, or are you just looking to expand more of what you're doing?
Absolutely. I want to teach people how to do this across multiple platforms in the gig economy. Anything from making money with vehicles to houses to anything that's kind of along this vein, and be able to start focusing on creating cash flow rather than working for income. So anything that's not trading time for money, I'm about.
I imagine the fundamental principles of what you're doing, can be transported to other sectors. It doesn't have to be housing as you're describing. So once you kind of have it wired in one place, I guess that's kind of a multiplier where you can put it in multiple places.
Yeah, and it's not just in this whole sphere that we've been talking about. It's also in anything that relates to technology. So there's 12 and 13-year-olds that are making millions of dollars a year on YouTube, just putting crazy videos on YouTube that are viewed by so many people that they can monetize them. Right. There's people that are creating blogs and creating podcasts, and they have sponsors on these podcasts. I have a podcast, and they're creating income that way. So the idea that you can create something, put it on the internet, and it lives forever, and it can generate income for you. You do it one time, and it generates income again and again and again. That's no different than owning a stock that pays dividends. But I would argue it's better, because you can create it for free without any monetary investment.
And less risk, because the stock can crash.
Less risk, and we're moving towards, the value is in the information. Information is the new oil. Information is the thing that's worth more than any other asset. And you can actually sell information, you can share information, you can create information, and that can be sold, and that can be an asset in and of itself. I think most people need to get their mind away from the idea that you have to have a traditional investment to create income, and you can look at the opportunity that exists online.
Well, we know that the biggest companies in the world, what are they brokering but your information? If you look at Google, Facebook, et cetera, I mean, they're getting a lot of information on you. And
you look at Uber. Uber is just simply a piece of software, and Airbnb is a simple piece of software. Airbnb is worth billions, and yet they don't actually own any of the properties. They're just providing a service.
Yeah, it's that Uber doesn't own a single car, Airbnb doesn't own a single hotel, and they're worth more than any car companies or hotels in the world.
Airbnb just surpassed all the large hotel brands for value.
Yeah, isn't it just amazing?
And that did that in 10 years, whereas Hilton Resorts has been around for 110, something like that, 100 years.
Mind-boggling.
Yeah.
With what you're doing specifically in the short-term rental market, if there's any kind of a downturn, a pullback, is that a concern for you?
Well, that's a good question. I thought about that, and I thought, after talking to some experts that are in the field, we kind of determined that if there's a downturn, I think that short-term rentals are going to do better. And what's going to happen is, in a downturn, people are going to look for additional sources of revenue. They're going to turn their own properties into cash flow. And beyond that, people are going to look for more value when they travel. So instead of spending $300 on a hotel room, especially if they're traveling with their family, they could spend $250 or $200 and stay in a home that has 3 bedrooms and 2 baths. So on Airbnb, generally, you're always going to get more for your money than you would in the hotel industry. So I think the first to suffer would be the hotel industry, whereas home sharing could actually expand and do really well in a downturn. And I think that that the opportunity really lies there if there is a huge downturn where people were to lose their jobs, they can monetize their own properties, they can monetize the home they live in, even if they don't own it. And I think that's a huge opportunity for most people that might not have any other opportunity to create income.
Well, I find this really fascinating, and I guess at this point maybe you're glad that 2009 happened, and you were knocked off your course to be able to put you where you are. So do you look back on that and you're grateful for it at this point?
I am very grateful, and it also humbled me because I think that the story of any hero's journey is that they seem to be doing well, and then they go through that pit of despair, that low point where they're redefined, they have to come out the other side. And it's taught me a lot about how to be content, whether you have a lot or have little. And I'm very thankful that I was able to have success again. But I would say it's definitely a blessing and definitely something I'm thankful that happened to me.
We're very thankful that you made the trip to come here and sit with us and share all this. I think it will inspire a lot of people, and I wish you continued success.
Well, thank you. It was a lot of fun, and I appreciate you having me here.
Wealth breakthroughs are all around you, ready for you to grab them, and I hope you've seen a wealth building idea that speaks to you. Now's the time, if you still haven't taken the plunge, to click below and review all the packages available to own wealth breakthroughs for yourself. If you click below, the next page has all the what you get details and shows you all the benefits and bonuses we've lined up for you. It's been a pleasure bringing you these interviews. I know I've learned so much, and I hope you've had fun watching and found your own wealth breakthrough along the way. For Wealth Breakthroughs, I'm Patrick Gentempo.